This is Scott Bauer on the floor of the CME Group. And boy, what a turnaround in the dollar just overnight, especially, versus the euro here. What is going on? Well, really, it hinged upon what came out of Steve Mnuchin's comments yesterday and what came out of the president's comments today. The big turnaround is Trump's endorsement today of the dollar, whereas yesterday we saw the rhetoric come out of Davos and Steve Mnuchin about how the weaker dollar is actually good here. So who do we believe? What does the market believe? Boy, just today alone we saw the dollar trade 88.5 all the way up to 89.6. Massive one-day intraday move here. Now, before we get into the comparison versus the euro, how does the dollar really work, in conjunction typically with our stock market here? Well, so far this year, the dollar's down over 3% while the stock market is up 6%. Typically, a weaker dollar is good for equities, good for the stock market, especially for the big multinational companies whose, possibly a big chunk of their currency is coming from overseas. Now, on the flip side of that, a weaker dollar really can impact yields, right? If we have to worry about inflation, the weaker dollar could be a cause to push up rates here. So that is definitely something to watch. Now, let's turn to how the dollar was working in turn with the euro here. Well, big euro news came out this morning, left rates unchanged. The news this morning was their economy solid footing. The words that they used coming out of the EU this morning: big growth, robust. Inflation almost hitting 2%. That is really their target. So things are really on track right there. So far this year, the euro is up 4% versus the dollar. That's on top of the 14% gain that we saw last year. Is that going to continue? Don't know. But this volatility that we're seeing right now and the push and pull of the rhetoric that we've seen coming out of Davos with Mnuchin and Trump makes for a very interesting trade in the dollar. This is Scott Bauer on the floor of the CME Group.